Peace be upon you, and welcome to today's comprehensive global news update. In today's pivotal episode, we are diving deep into the escalating pressures to fracturing the American economy, the sudden and sharp downturn in global stock markets, the evolving and precarious tensions in the Middle East, and the critical security and humanitarian developments currently shaping the geopolitical landscape of 2026. If you want to understand the intricate web of global politics, economics, and international relations, stay with us until the end, because today's headlines are not just news. They are the warning signals for our collective future. Segment 1, the U.S. economy, a system under stress. We begin our coverage with the United States economy, which is currently facing its most significant challenge in over a decade. According to the latest labor reports released for January 2026, the U.S. has witnessed an alarming acceleration in layoffs. Over 100,000 jobs were slashed in a single month, a figure that stands as the highest monthly job loss since the immediate aftermath of the 2009 financial crisis. The structural shift. This is not merely a cyclical downturn. Experts warn this is a structural shift. The primary drivers behind this surge in unemployment are threefold: aggressive corporate restructuring, the rapid integration of AI automation, and a brutal focus on cost-cutting to satisfy shareholder demands. The technology sector, once the engine of American job growth, is undergoing a radical metamorphosis. Silicon Valley giants and mid-sized tech firms are pivoting their strategies entirely. We are seeing a hiring freeze on human roles while capital expenditure on artificial intelligence infrastructure skyrockets. This suggests a decoupling of corporate revenue growth from employment generation, a phenomenon that policymakers have long feared: the ripple effect. The consequences of this shift are striking directly at the heart of the American middle class. When high-paying tech and administrative jobs evaporate, consumer confidence plummets. In an economy where consumer spending drives nearly 70% of GDP, a hesitant consumer means a stalled economy. Economists are now openly discussing the risk of a global slowdown. It is crucial to remember the adage, when America sneezes, the world catches a cold. The U.S. economy remains the central pillar of the global financial system. If U.S. demand contracts, export-dependent economies in Europe, like Germany, and Asia, like China and Japan, as well as developing nations reliant on the dollar, will face immediate headwinds. We are staring at the potential for a synchronized global recession if these trends are not reversed. Segment 2, global markets, the AI bubble concerns. Turning our attention to the global financial markets, the sentiment has shifted from cautious optimism to overt fear. The market correction this week witnessed a sharp, broad-based decline across global stock exchanges. Major indexes, including the S&P 500, the FTSE 100, and the Nikkei, have tumbled as investors liquidate positions to move into safe haven assets like gold and government bonds. The AI reality check. The core of this volatility lies in the AI reckoning. For the past 3 years, the market has been propped up by excessive expectations regarding artificial intelligence. Valuations for chipmakers, software developers, and cloud providers reached astronomical heights based on the promise of future earnings. Now, in 2026, the bill has come due. Analysts are reporting that Wall Street is finally asking the hard questions. Where are the profits? While AI has improved efficiency, it has not yet generated the massive revenue streams required to justify the trillion-dollar valuations. This skepticism is causing a sell-off in tech stocks, dragging the broader market down with them. Crypto and volatility. This uncertainty has spilled over into the cryptocurrency markets. Bitcoin and other digital assets are experiencing extreme volatility, failing to act as a hedge against the tech downturn. Market experts suggest we are in a painful transition phase, a period where the global economy tries to find a new equilibrium between speculative technology growth and tangible economic stability. The financial year of 2026 is shaping up to be a test of resilience for investors worldwide. Segment 3, Middle East, the balance between war and diplomacy. Moving to the Middle East, the region remains a volatile flashpoint with global implications. Diplomacy in Oman. In a significant diplomatic development, representatives from the United States and Iran have concluded a round of clandestine negotiations in Oman, Officials have cautiously labeled these talks a good start, though they emphasize that a comprehensive agreement remains distant. Why does this matter? These talks are critical because they address the root causes of regional instability, military proxy conflicts, and nuclear proliferation concerns. Oman has historically played the role of the neutral mediator, and success here could de-escalate tensions in the Strait of Hormuz, stabilizing global oil markets and lowering energy prices for the world. The crisis in Gaza. Simultaneously, the humanitarian situation in Gaza continues to demand urgent attention. International coalitions are currently planning a new, large-scale humanitarian mission. Activists, doctors, and logistics experts are attempting to establish secure corridors to deliver aid to a population pushed to the brink. However, political disagreements and security risks on the ground continue to hamper these efforts. The Middle East, caught between high-stakes diplomacy and grinding humanitarian crises, remains the center of gravity for global geopolitical risk. Segment 4, Global Security, the return of the hotline. On the front of global security, we are seeing a return to Cold War-era mechanisms to prevent catastrophe, U.S.-Russia deconfliction. In a move that highlights the severity of current tensions, Russia and the United States have revived direct military communication channels, often referred to as deconfliction lines. This is not a sign of friendship, but of necessity. In an era of nuclear saber-rattling, these channels are essential to prevent a misunderstanding or an accidental clash from escalating into World War III. Ukraine peace parameters. Regarding the conflict in Ukraine, 2026 is seeing a shift from the battlefield to the negotiating table. Diplomatic meetings are ongoing in neutral venues where peace parameters are being quietly discussed. While the fighting continues, the exhaustion of resources on both sides is forcing a conversation about what a post-war Europe looks like. Experts believe 2026 could be the year of diplomacy, but warn that geopolitical rivalry is not ending. It is simply changing form. Segment 5. The Forgotten Crises, Humanitarian Instability. While the cameras focus on superpowers, devastating humanitarian crises are growing in the shadows. Famine in Sudan. In the Darfur region of Sudan, the situation has deteriorated into a full-scale catastrophe. Famine conditions are worsening by the day, exacerbated by the blockage of aid routes. Disturbing reports have emerged of targeted attacks on healthcare facilities, leaving millions without access to food or medicine. Security in Nigeria. Meanwhile, in West Africa, Nigeria is grappling with a resurgence of violent extremism. Following a series of brutal attacks, the government has ordered a massive military deployment. This highlights a broader security challenge across the African continent, where economic instability and climate change are fueling insurgency. These developments prove a somber point. Global instability is not just about political posturing. It is a matter of life and death for millions. Segment 6. The Collapse of Legacy Media. A significant cultural and corporate shift is occurring within the United States media landscape. The fall of the Post. The Washington Post, a titan of American journalism, has announced massive workforce reductions following sustained financial losses. This is emblematic of the crisis facing the traditional media industry. The digital shift, legacy media, is struggling to survive in an ecosystem dominated by algorithmic news feeds, short-form video, and independent creators. Audience behavior has fundamentally changed. People no longer wait for the morning paper or the evening news. This fragmentation of media makes it harder to build national consensus and easier for misinformation to spread, adding another layer of complexity to the challenges of 2026. Segment 7. Analysis. What this means for the world. When we analyze these disparate threads together, a clear and concerning pattern emerges for the year 2026. Economic uncertainty. The safety net of the job market is fraying under the weight of AI and automation. Geopolitical friction. Tensions remain historically high, though there is a pivot toward containment via diplomacy rather than open warfare. Technological transition. We are in the messy adolescence of the AI economy. High costs, uncertain returns, and social disruption. Humanitarian imperative. The gap between human needs and international aid is widening. Experts suggest that 2026 will be recorded in history as a year of the Great Restructuring. A time when the world's economic and political systems were forced to adapt to a new reality or risk to collapse. Closing. That concludes today's comprehensive global news update. We want to hear from you. Which of these developments do you believe will have the greatest impact on your life? Is it the shifting U.S. economy, the tensions in the Middle East, or the volatility of the global markets? Please leave your thoughts in the comment section below. If you value deep, analytical, daily updates on the state of our world, please subscribe to the channel and like this video to support independent journalism. I will see you in the next update. Goodbye.